One of the technical analysts I follow just made an announcement. But what should you do when a major figure puts out a market call? Do we listen or not? Before you decide, let me tell you what he just stated. His message reads as follows. Pay attention here. We just witnessed trend breaks on some index charts, and these breaks are coming at a key time and could spell more trouble to come. So, as investors, do we listen? My answer is no. You don't listen to him. You don't listen to CNBC. You don't listen to the government. And you don't listen to me. So let's take a look. So the market call made by the technical analyst is this chart here. Shows the wedge moving on up from the lows in December up to the recent highs. And in this circle here, this is the trend break where the market has gone up here into the apex and has broken below to come up to this point here, but it hasn't come up or above. So that's the market call. Now, everyone watches the price charts, so you don't have an edge there. But more than that, I believe the action is in the oscillators and that the price chart really is the result. Anyone can draw lines on price charts, but to me, they are the symptoms, not the ailment and not the cure. Uncle Mike MD, I'm sure you get this analogy. The price chart can often be a lagging indicator of where the market is going. The oscillators are the heart and soul of the market participants. In my opinion, the oscillators provide a better picture of what investors are thinking. And that's why you don't listen to anyone. Just look at the charts and let the charts guide you. So let me show you what I mean. So again, this chart here is the market call with the trend break at this point in the circle. Well, if you go back and look at this chart, what about this? Was that the trend break there as well in this area here? Or what about this? Was that a trend break here? Well, what about this? Was that a trend break? Or what about this? Another trend break. Another trend break. Another trend break. Another trend break. And again, another trend break. So how many trend breaks have there been in the last several months? That many or more. That's the problem. You can draw all these lines that you want, and in my humble opinion, they really don't mean much. But technicians look at these, they follow them. So I have to follow them, and I think it's best that you follow them too. Because when they follow these things, they may act upon these trend lines. And it's always a good idea to be ahead of the curve. But in my opinion, these trend lines can mean anything or nothing. And you kind of get my opinion, but we have to watch them. So let's go to our charts and I'll show you in more detail. So now we're looking at our charts. This is the 1 year, but I've switched from the daily to the weekly. The previous chart was done on a daily basis. This is on a weekly basis. And we talk about the weekly basis and we talk about the monthly and the daily. You need to check all the time frames to find out where the action is. And as I've been discussing in the last several weeks, the weekly is where the action is. This is where you can see what's going on. There's the bottom in 2018 December, and then here's the top just recently. Now, you can draw all the lines that you want on this, but it isn't going to tell you anything. That's not going to tell you when the price break is. This point here looks no different than any other point there, even if you draw some lines on it. In my humble opinion, go to the oscillators. We're looking at the MAC. MAC bottomed here. Fast line moved through the slow line. Both lines accelerated above zero, and they continue to accelerate here. No real slowdown. Maybe here there was a bit of a hiccup at that point there. But for that, you go back to the histogram and take a look at there. And you can see the histogram kind of dipped in this area here. Now, it did run all the way up here, had the dip, came back up, and now it looks like it might be rolling over again. This is going to give you weeks of advance notice of what's going on in the stock market, or at least in the indice. Here, price rate of change, that came up so high, it had to come down, which it is, and it may pierce through the slower line here. And that is a red flag, but it's not much of a concern yet. Relative strength, we've talked about that many times. Relative strength goes back here and even further back into early 2018. That has given you months and months of notice of slowing down in the market, or at least some deterioration in the market. Stochastics, fast line is still above the slow line, but they're real close. The fast line may go through. Once again, looking here, there's no concern until we get up to this level here. That's several months. You don't really have to be concerned. And even now, you don't have to be too concerned. Right now, the flags are starting to come up, so you need to pay closer attention, but you don't need to panic. Again, here in the volume's been dropping, but it's been dropping for several months, and we've talked about it. The Williams looks just fine. Back up here to the price chart. This is where my main argument lies, is you can't look at that price chart, no matter how many lines you put in it, and tell me you know what's going to happen in the market. Now, I don't know what's going to happen in the market either, but right here, the MAC and the other oscillators tell me that there is strength in this move and it's continuing up. The histogram, once again, is going to be an indication that things are slowing down. And of course, the deterioration has been going on for quite some time, as shown by the RSI. But we know about that. We're way ahead of the technicians that just look at the price charts. So once again, don't listen to anybody. Look at the price charts, then go look at the oscillators. They'll tell you when to be concerned. For today, that's ChewDog Charts. Thank you.